What is going on, everyone? Welcome back to another day, another dollar. Here with me, Chris, your host. All right. Anyway, I'm not. We're gonna get right into it, man. We're gonna jump right into the 30-minute time frame today. We're gonna go over just basically how I look at it from a kind of zoomed out standpoint. How I'm looking at how this balance is shaping up to be. Kind of give you some insight on what I think is possible and it's just some different scenarios that can happen within our 30-minute intraday time frames. As far as today went, I took one trade only, and did all right. Not as well as I had hoped, or I guess it didn't work out the way I wanted it to, more or less. And we'll go over that here in a minute. But today's video is going to be me going over 30-minute time frames over the last 4 days, kind of giving you guys some insight on how to look at a balance area and how to trade within this balance area. Um, and it's very difficult. A lot of people get chopped up. A lot of people get hurt on days where we're in a consolidation pattern because they'll get long, short, long, short, long, short, and just stop themselves out over and over and over again, ignoring certain things in the market that or certain nuances in the market that could have helped them lean to one side. You never want to have a bias in the market, right? But you do want to have an idea of what the market is trying to do. And today, the market was trying to go down. And we'll go over how you could have traded that and some things you could have looked for in that time. But for now, let's go over just a larger zoomed out picture of what is occurring on our 30-minute or daily time frame, however you want to look at it. Each one of these each one of these are days, right? Split up, right? You got Friday, Monday, Tuesday, Wednesday. The last 4 days is what we're going to be looking at. So initially, the daily was one time framing up, right? We had been one time framing up since we gapped out of that balance area that I discussed in yesterday's video. If you do not want to know what I'm talking about, I suggest you go watch yesterday's video so you can get an idea. And you can kind of understand some key areas that I'm about to be marking here. So first thing I'm going to mark is Friday's low. Friday's low is going to be important. I think it is going to be, since that is an area where the gap starts, I think Friday's low is going to be very important to us from the trading standpoint. And we're going to want to know where that is at. Now, we were one time framing up, right? We took out this high, one time framed up, meaning we took out the previous day's high. Then we took out on Monday, we took out Friday's high, continued to one time frame up, but we did not continue that trend on Tuesday. As Tuesday, we took out Monday's low, stopping that series of higher highs, right? So once we stop that, that means we've come into some sort of balance, right? Inventory is being moved around in here, waiting to be distributed elsewhere, whether it be back to the downside or to the upside, who knows? But we'll mark Monday's high as it is a level of significance, right? And I'm not going to give, it's not going to be exact areas. You know what? Let's make it exact areas. Why not, right? It's my video. If you don't like it. So 49 would be Friday's low. So I just want to mark these areas for now. Okay, so now this is what our chart looks like over the last 4 days. We've got Monday's high and Friday's low marked. Now, why do I have it marked? Well, because once we pulled back on Tuesday and took out Monday's low, we stopped that series of higher highs, and now we've come into a balance. And because we had pulled back into Friday's range, I want to include Friday as a part of our balance area. Now, could you say, hey, this is a 3-day balance rather than a 4-day? You could, and you would not be wrong. And say you want to mark Tuesday's low as your balance low. It's not much of a difference, right? No matter what, whether you take out Tuesday's low and begin one time framing down, meaning we're taking out daily lows at this point. We're starting a trend of setting lower lows and lower highs is what that means. So once we start to one time frame down, if you say that begins by taking out Tuesday's low, that's okay, because once we take out Friday's low, and ultimately I think we will at some point, to backfill this small gap area here, which we'll mark, that way we know where the gap fills at. But once we come out, either whoever's saying we're in a 3-day balance comes out one time framing down, and we get to Friday's low, we take it out, then guess what? I'm one time framing down too. It's all going to sync up. It's an art, not a science, and you can do what you will. But because buyers have been so strong recently, we want to give them the benefit of the doubt. And so I'm going to say that Friday's low is our balance low. So we want to make sure that we mark this as such. So we're going to say, we'll say low of day / balance low. And then we'll give it a nice little red mark here. Because if we break this, let's see, do we mark it? I'm trying to debate with myself. All right, we'll just, for the sake of time, we'll mark it green. So we got our balance low, because once you come to a balance low, you want to see if we defend that balance low and hold it, right? If we get there, you want to see buyers step in and hold that gap. If you are a buyer, right? If you're anybody that bought back on this day, you do not want to take out that Friday low, because then at that point you'll see some stop runs. If you do take it out, stops will get set off and people will begin to liquidate their position, which will then ultimately fill this this gap. Ooh, that's another thing. We need to mark that this is a gap, right? This is where our gap starts. And then we have where our gap fills right here at 39.75. 39.75. This is a high of day / gap fill. And you want to see if we fill that area, buyers step into that area, right? And then obviously this will be our balance high, this 43.0575. That will be our high of day / balance high. And we'll label that red because sellers want to defend that area, right? Sellers want to defend that balance high, okay? So, and you can see in today's price action, right? Yesterday we took out Monday's low. We attempted to push lower, but could not test near the balance low. Today we pushed higher, tested what we have as our balance high and Monday's high of 43.05, that 4,300 level becoming stubborn, as we kind of expected it to. And you can see that in yesterday's video, what I'm talking about. If you want to know, just go watch it. I'm gonna keep pushing you. Anyway, we got near it today and then backed off. And guess what? We couldn't take out Tuesday's low, right? So buyers are still comfortable above the 42.50 area, right? Buyers are still comfortable above that 42.50 area. So what can we expect to see? We could expect to see some more consolidation inside here, right? Some more sideways action. And all a market imbalance means is a market is waiting for more market generated information, whether that be a news event to act as a catalyst or some other something else happens, like us taking out our balance low and coming out of balance to the downside and one time framing down, filling the gap, and then taking back this trend day here. Or whether we come back up, break through the 4,300 level, our balance high, and begin to one time frame up again and continue to push higher. Now, considering things in the larger picture, you would think this market wants to continue higher, but consolidation on the daily is not bad, nor is a pullback to fill in where this poor structure is at. So how will we look to trade this balance area? Well, obviously, today was a bit of a fake out, right? We opened near yesterday's high, You can see that right here, right? This was yesterday's high, 42.94. Let me mark that for you. So we opened up right near yesterday's high, pushed above it, took it out, and tested our balance high, right? And we came back in the first 30-minute time frame. Second 30-minute time frame, we pushed down and got acceptance back below the opening and back into the previous day's range. Because we pushed up, tested that balance high, could not only once but twice could not find acceptance above 4,300 because the first time frame did it, the second time frame did it, couldn't find any acceptance above it. We roll over, we start to one time frame down, meaning what does one time framing down means? It means the first or the second 30-minute time frame takes out the first time frame's high, right? So each one of these are 30-minute candle bars, right? Or in my case, I just blanked. What was I talking about? Anyway, what am I using? Uh, what about monkey bars, right? Yeah. So I'm using bar chart. Excuse me, not candles, bar chart. I forgot what I was using there for a second. But in my case, these are 30-minute bars, right? And for me, it's just easier to see things like single prints here, right? You can see where those gaps are in the chart versus candles. So those are some nuances that we talk about in the profile world that kind of help you, instead of buying right against the open on this or in the next time frame above the opening, because we had taken out this first time frame low, which we will call A period, right? This is going to be a bit of a longer video, but hopefully you understand what I'm talking about. So this first 30-minute time frame is called A period. The second 30-minute time frame we'll call it B period, right? B period took out A's low. We start to one time frame down, and by doing so and getting back below the open, kind of signifies, all right, sellers may start to pick up some steam here, right? We couldn't take out A's high. We couldn't find acceptance above the 4,300 level. We knew there was a balance high up here. So you got some scenarios going through your head now, right? You're thinking, all right, maybe we just tested a balance high and failed at it. We tested 4,300 again, failed at it. Now, do we see some more downside movement? And that is exactly what we got. Here in C period, we took out B period's low, continuing the one-time framing, right? We got back above the open, but only for a brief second before back above the previous day's high here before sellers, right? Anybody that was long up here that got trapped, where they were selling out of their position, and obviously short sellers were stepping into the market, pushing this market lower, pushing price lower, taking out B period's low, right? The second 30-minute time frame, which is also our initial balance low. So, right, we have one time framing down, and now we have the initial balance. The initial balance is set by A and B period, right? The first two time frames is the initial balance. You either take out one side of it, whether it be the low side or the high side, right? Will kind of determine how the market wants to continue to move. And since today we took out the initial balance low, you knew we were going to be rotating back down. Now, there's some other targets on the downside that you could have looked for on the short side, right? If you shorted above the open, you could have used B period's high as your out, right? You would have been risking a decent amount of exposure there. But once you got back below the open, you most certainly could have taken the short to go and take out B period's low. And once you took out B period's low, you could have shorted on any push up inside of B's range, right? Because you didn't know if the market wanted to go trend. So this market continues to push lower, and then we get a little bit of consolidation period here in D period. And then in E period, we stopped the series of lower lows, but not before setting a lower or a reversal bar, right? So E period pops D's high, right? So this 30-minute time frame we'll call D. Pop that time frame's high, stopping the one time framing down initially, but once it pushed up, E could not get back above the open. So sellers started to pick up some more steam, right? We couldn't get back to the open, couldn't get back above it. So once smart sellers seen that, once big money seen that, they started pushing this market back down. We rotate lower, take out D's low, take out C's low, and guess what? We're back to one time framing down. We one time frame down an F period by taking out E's low, and now we're approaching Tuesday's low. Now we're approaching Tuesday's low. We held it, but we were approaching Tuesday's low. So F period we pushed down. G period could not take out F's low. My mouse is dying. Give me a second. I think I'm gonna have to grab the cord for it. You guys will bear with me 1 second. All right, sorry about that, guys. My mouse died. But this is G period here, right? So we got G period now. G period could not take out F's low, and you can see that here, right? F's low was 42.74.25. G period got down to it, could not take it out, and then pushed up, took out F's high, resulting in what we say in the profile world as an afternoon rally high. So we began to push up in G period, and this presented a great opportunity to take a short against where half back was, which is this dotted line, and against value high and E's high, right? So on the push up, you definitely could have taken a short. Granted, it wasn't much of a push up before G failed, rolled over, and then H set new lows on the day. I actually missed this trade here in G period, and then attempted to take the trade later on in the day, and I'll show you that here in a second. But after H period set new lows on the day, we approached the previous day's low, couldn't take it out. So we attempted again in I period, couldn't take it out. So this is kind of getting a sign that maybe sellers are starting to get a little weak, a little tired, and we might see another type of relief, kind of like we did here in G period, right? Once G couldn't take it out slow, we got a little bit of relief. Now we're approaching another visual area where H and I couldn't take out Tuesday's low or the previous day's low, so we get a little bit of a relief here in J period, presenting another great opportunity to short against G's high, using that as your out, right? So you're pushing up into the 80s, and then you're using 83.75 as your stop. So as you push up, you're risking 3 points, you short 80, and we rolled over. And that's exactly what I did today. We pushed up. I started shorting 78, 79, 77s on the way back down. I didn't quite get 80 as I wanted to have a little bit more ammo if we pushed up higher. But I shorted it. It came back in, and I exited my position around 72 later in K period, which was great opportunity, right? So opportunities were presented, but I guarantee you people were buying on this push up and then selling at the lows. You got to be patient in this market and sell them whenever the market is telling you it's trying to go down lower. Sell at the highs, buy at the lows until I even recommend not buying at the lows and just waiting to sell at the high, because this market is still attempting to push lower. You have inventory overhead that wants to push lower. And then you had another opportunity to short an L period against J's high, using 81 or using 82.25 as your out. You could have shorted 80, risking 2 points. This market rolled over and approached the low of day once again, and you could have gotten out for a decent profit there, right? From 81 back down to 70, that's 10 points. You could have made good money after M period rolled down to the low. So that's how the profile is traded, right? It kind of gave you nuances that you could have looked for, right? We were one time framing down. We had a little bit of relief rallies. Each one got sold into. Same thing here. Just got sold into, right? You just got to understand how to look for it. Now, how do we trade coming into tomorrow? Well, if we take out today's low and Tuesday's low, you would look to approach this area down here at 42.49 to 42.39, which would be an area that I would myself, even though the daily would be one time framing down at that point, be looking to buy against. However, if the market is telling me otherwise, which meaning it would have something of reverse of this, which is where the market wants to go trend down, then I would short on pushes up until the market told me it is ready to move up higher again. So this is what my charts look like on a normal day. So you could see here we pushed up against that previous high day, couldn't take it out, or we took out yesterday's high day, but we could not take out this high day here at 43.0575. And knowing where we had a point of control, this is where things get a little bit more technical with the profile, is knowing where you have points of control, like yesterday's 9Y point of control here, I have marked. We rotate once we took out the A's low period, A period's low, excuse me. We knew that this market had a good opportunity to pull back into 83.50, right? So you could have shorted from 93 to 83 and made 10 points. Great trade because you had a target or a magnet to the downside. And today we create another one of those magnets, and I'll mark that here in just a second for you guys. But we approached the previous day's low and couldn't quite get that. So we're going to mark these destinations for you guys so you can see how I mark them. So we have 69.25, which is a poor low. 69.25, low of day, poor low. We'll mark that. Boom. Then we have our, I believe, a 9Y point of control right here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep. 9Y point of control at 76.25. So what is a point of control? It is the widest point in the profile where closest to halfback where we traded through the same price multiple times. So there are 13 time frames in the day, and 9 out of the 13 time frames, you like 9 or more because it's significant. 9 out of the 13 time frames traded back and forth through this 42.76.25 area, which represented a very comfortable area for anybody that was buying or selling, right? So that was kind of the median price or the mean. So now we have another 9Y point of control. 9Y POC. Label it as such. We have an afternoon rally high here, right? It's going to be a reference point. If we push up near it, you'll look to take it or attempt to take a short against it or see how the market reacts to it. So we have an afternoon rally high. And if you made it to the end of this video, you're an absolute trooper because I criticize myself pretty heavily on these things. A, B, C, D, E, F, or E, F, G. Okay. And then we have today's high right here at 75. And when I say I criticize myself pretty heavily, it's like, I don't know if you guys watch till the end. If you do, you could let me know by leaving a thumbs up. And I hope this is a helpful video. And if not, just let me know how I can explain better. I'd like to be able to teach this a little bit more clearly. In my head, it makes a whole lot of sense, but in your head, it may not. So as far as destinations go, right, for the downside, we have today's low of day at 69.25. Then we have 68.50. If we get those, you will be trading down to 42.49 and filling the gap at 42.39.75. Below that, you have 42.19, single print where they start, and they fill at 42.13.50 is where the first set fills. I would be looking to see if we did pull back into this area, right? Say we opened up pulled down, pushed up, came back down, right? Got a little bit of a relief. Continue. Now, don't judge me on my drawing, okay? Came back down, filled the gap, came back into what we would call this upper distribution here from that from the first, right? If we filled the gap, came back into this upper distribution and could not take out the lower portion of that upper distribution at 42.19. Look to see if we get a little bit of consolidation in here, right? A little bit of a wide point of control, and then potentially make a move back to the upside. Why is it not clicking? Back to the upside like such. Would not be surprised to see some crap like that come tomorrow if we were to move down lower. Now for the upside, enough with my doodling. We have the 9-wide point of control at 42.7625. 9-wide point of control. We get above that, you will look to trade into 42.8375 afternoon rally high, and above that is our high of day at 43.0475 and 43.0575 balance high. And then above that would look to trade into 43.2750 August high, extreme balance high. If you guys would not do not know what I'm talking about, go watch yesterday's video. Thanks for watching, guys. I hope you all enjoyed it. Hopefully this made sense. If not, let me know I'm stupid. Comment that. I don't care. We'll catch you in the next one. Thanks.